On the screen you're looking at right now is the chart showing the incredible growth of one of the most legendary traders in modern history, CIS. He started trading in the early 2000s with just $30,000, sitting in a small apartment in Japan, placing trades on his home computer. 18 years later, that same account had grown to more than $230 million. In today's video, we'll dive deep into his story to uncover who CIS really is and the trading strategies that transformed an ordinary retail trader into one of the greatest market legends of our time. Part 1. Who is CIS? CIS is one of Japan's most famous yet most mysterious traders. To this day, no one knows his real name. For personal safety and to protect his family's privacy, he has never shown his face in public. In the few rare interviews he's given, CIS appeared behind a mask and his voice was digitally altered. Despite his secrecy, he's one of the most followed traders in the country. His Twitter account, where he occasionally shares insights and trading thoughts, has attracted over 700,000 followers, a remarkable number for someone who prefers to stay in the shadows.
CIS is not just a stock trader. Over the years, he has built a reputation for being a multi-market player, trading Japanese equities, forex pairs, government bonds, and even futures contracts. He's known for his sharp instincts, quick decision-making, and deep understanding of market psychology. But his rise to fame began with a single, unforgettable trade, a story that has become part of Japan's financial folklore. His first big break, the JCOM trade. In December 2005, something extraordinary happened on the Tokyo Stock Exchange. A clerk at Mizuho Securities, one of Japan's largest brokerage firms, made a simple but catastrophic typing error. The order was supposed to be, sell 1 share of JCOM at 650,000 yen, but the clerk mistakenly entered, sell 650,000 shares at 1 yen. At that time, JCOM was a newly listed company, and the total number of outstanding shares wasn't even 650,000. It was an impossible order, yet it was executed due to a system flaw. CIS noticed the mistake almost instantly. While most traders froze in disbelief, he acted fast. He started buying aggressively, taking advantage of the mispriced shares before the system could correct itself. Within just 10 minutes, CIS earned about 600 million yen, roughly 6 million USD at that time, from a single trade. That lightning-fast reaction made him a legend overnight. The Japanese media couldn't stop talking about the anonymous trader who outsmarted the market during one of its strangest moments. But along with fame came skepticism. Many people called him lucky, just a man who happened to be at the right place at the right time. CIS didn't argue. He didn't need to, because over the next decade and a half, he would quietly prove that success wasn't luck. It was skill, discipline, and consistency. From his humble beginnings with $30,000, CIS grew his trading account to more than $230 million by 2018, multiplying it 7,667 times over 18 years. That's not luck. That's mastery. So the real question is, what was his edge? Let's break it down.
Part 2. CIS's trading strategies. Although CIS has never published a formal strategy, from his interviews and trading records, 2 key methods emerge clearly. Strategy number 1. MA crossover plus price action. When it comes to trading, CIS doesn't rely on complicated indicators or secret formulas. His first core method is built around something incredibly simple: moving averages. Specifically, he focuses on the MA5 and the MA25, 2 short-term moving averages that help him capture short bursts of momentum. The rule is straightforward. He buys when the MA5 crosses above the MA25, but only when the stock is already in a strong uptrend. That second condition is critical. Short-term moving averages are extremely sensitive. They react quickly to price changes. If you use them in a sideways market, you'll get whipsawed again and again. But when you apply them to a trending market, they become a sharp and effective tool for catching momentum early. Let's look at a clear example. Lululemon, LULU, 2020. By late March 2020, Lululemon stock had already surged more than 50% from its COVID lows. That strong move confirmed the most important condition of CIS's setup, the presence of upward momentum. At that point, CIS wouldn't chase the rally. Instead, he'd wait. He'd let the price pull back, consolidate, and allow the moving averages to tighten. Then came the signal. The MA5, or blue line, crossed above the MA25, or black line. For CIS, that crossover wasn't just a technical event. It was confirmation that buyers had regained control after a brief pause. That's his ideal entry point. Following that crossover, LULU stock climbed another 70% in just about 40 trading sessions. When the MA5 eventually crossed back below the MA25, that likely marked his exit, locking in substantial gains while avoiding major drawdowns. And the pattern didn't stop there. In July 2020, Lululemon formed another bullish crossover, again after a noticeable uptrend. The setup met all of CIS's criteria: prior momentum, consolidation, and a fresh breakout signal. After that second crossover, the stock rose another 20%, reinforcing the effectiveness of this simple yet disciplined approach. Takeaway: the MA5-MA25 crossover strategy is not about prediction, it's about confirmation. It's a tool that tells CIS when momentum is real and when to ride it. Simple, clear, and repeatable, but only when the market is trending. In choppy, directionless conditions, this same strategy can destroy a trader's account. That's why CIS only strikes when the odds are in his favor, when the trend is undeniable.
Strategy number 2, intermarket correlation. Nikkei 225 versus Euro JPY. CIS isn't the kind of trader who looks at one chart in isolation. He studies how different markets interact, how money flows from one asset class to another. One of his favorite relationships is between the Nikkei 225 index and the Euro JPY currency pair. Under normal conditions, these two tend to move in the same direction. When Euro JPY rises, it signals that investors are taking on more risk, moving money out of the safe haven yen and into higher-yielding assets. And when that happens, the Nikkei 225, Japan's benchmark stock index, also tends to rise. The reverse is true. When Euro JPY falls, risk appetite drops, and Japanese equities often follow. But sometimes this relationship breaks, and that's when CIS moves in.
Example: in late 2024, the Nikkei 225 was surging, while Euro JPY was unexpectedly falling. To most traders, that seemed confusing. To CIS, it was opportunity. He recognized this as a temporary divergence, something that rarely lasts. He shorted the Nikkei, expecting it to fall back in line with the weaker Euro JPY. A few weeks later, that's exactly what happened. The Nikkei plunged, closing the gap and confirming his thesis. Then, in April 2025, the situation flipped. Euro JPY began to rise, showing renewed appetite for risk, while the Nikkei 225 lagged behind. CIS went long the Nikkei, betting that the index would catch up, and, once again, he was right. The Nikkei rebounded strongly, restoring the usual correlation. Takeaway: CIS doesn't rely on luck or emotion. He uses logic, correlation, and patience to exploit short-term inefficiencies between related markets. While most traders chase price, CIS waits for relationships to break and profits when they return to balance. Part 3.
CIS's trading philosophy. CIS's trading strategies might seem simple, moving averages, correlations, and momentum, but the real secret lies in his mindset. His philosophy is what truly separates him from the crowd. He often says that most traders fail not because of their system, but because of their emotions. Over the years, he's shared several principles that define how he approaches the market. Number 1. You don't find entry points. The market gives them to you. CIS doesn't believe in forcing trades. He waits for the market to show its hand, for the setup to appear naturally. Patience, he says, is the most underrated skill in trading. If the market isn't giving you a clear signal, the best move is to do nothing.
2. Don't care about a single trade. For CIS, one trade means nothing. He looks at trading as a long-term statistical game. Success isn't built on a few lucky wins, it's built on thousands of consistent, disciplined decisions. He's never emotionally attached to any position. If it's wrong, he moves on instantly. 3. Cut losses fast. This is his golden rule. If a stock doesn't move in your favor, get out, he says. CIS believes traders lose not because of small mistakes, but because they refuse to admit when they're wrong. Buy what should be bought, sell what should be sold. Simple, but brutally effective. 4. Ignore fundamentals. While analysts dig through earnings reports, CIS focuses on one thing: price. He believes that charts already reflect every piece of information that matters. When great earnings are announced, it's often when retail traders buy the top. Don't swim when you're a bird. Stick to your edge. And for CIS, that edge is pure price action.
CIS's journey from $30,000 to over $230 million isn't about luck or secret indicators. It's about simplicity, discipline, and consistency. He mastered two basic ideas: ride trends using clear signals, exploit temporary market disconnections. If this video helped you understand how great traders think, smash that like button, subscribe for more deep dives into the world's top traders. And if you want to support my research, you can donate via Super Thanks or join as a channel member.